Okay, it's Friday, but that doesn't mean that you don't have the opportunity to take a look what's happening in the market and understand how Wall Street bets all the time. Hey, my name is JR. I'm the head editor at Market Surveillance Alliance. And what I do with my team is that we're looking to understand what's happening, how Wall Street are allocating capital. The moment you understand how they're placing those bets, you start thinking like them and having a sense that you don't have to fight the tape. You can join them. Well, you want to fight the Fed right now, but we'll talk more about that in a moment. But let's take a look at what I have for you guys today. So first, Netflix, big name. Fundamentally speaking, yeah, I understand. It's no-brainer. Disney Plus. I have Disney Plus. I have HBO Max. I have Netflix as well. Yeah, absolutely. Netflix has less subscribers. And one of the mistakes I think they did on the past is that they didn't monetize as much as they should, especially during the health crisis in 2020. That was the issue. That's the challenge. They didn't. Now, I think Disney Plus will come with something like that, so it won't be as much as the benefit if Netflix does it. But right now, based on the NFP, I repeat, non-farm payroll, that figure of 315,000 jobs, it's a massive drop coming all the way from the last figure that was about 528,000. So that's positive for the market. And I think someone is playing that idea. So right now, 780. I'm not sure what time I'm going to receive this email, or it will be posted on my YouTube channel right away. So one of the things you want to do is, if you're watching me right now, is that you want to make sure you subscribe. Not because I just want new followers or I want to become a YouTuber. It has nothing to do with that. It's because what I do in my channel, although we do have a service, I do have something to offer, I'm going to give you actionable ideas for you to understand and for you to decide if you take it. But if you don't take those ideas on time, you will pay a little bit more. And what happened then is your return on investment is a lot lower. Okay, so just keep that in mind. So if you're watching me on YouTube, you want to make sure you subscribe to the channel for our team to know that you're there, and we're going to keep building content, because that's what we do. Build the content that gives you the edge in financial markets, especially for everything that is happening today. So look at the ask. The ask right there, that's 770. Pay no more than 850. And just so you know, if you look at the volume, let me just refresh this one. There's close to $500,000. I repeat, $500,000 rotating in this whole thing. You have so far volume, 1,765 contracts. Just multiply that by just basic case, 7.65. That's $765 per contract. That gives you an idea how much money it's coming in. How do I know it's coming in? Well, you can always pay attention, for example, what is happening with the technology index. That's positive, so I will bet that's something someone is buying, someone's taking risk. And then you can always take a look at the VIX. If the VIX, it's kind of flat or heading lower, you can see it's negative. It's minus 8.45% today. Absolutely. My view on this particular trade today, what they are doing, what Wall Street is doing, because we know that it's coming in two trades. I think it's $300,000 and $270,000. So we know that the money's there. What do I do? Now, this trade's for 2 weeks. You have to, this is the thing with retail traders. Not everything can be on the same day. Not everything can be in 24 hours. Yes, we find some success in very short-term opportunities, but this is the type of trade that you take with one contract. For retail, sometimes accounts are between $2,000, $3,000. Even for a $3,000 account, this trade is pretty big. Now, if you take the trade, what are you looking to accomplish? If you get the trade under 8, you're looking to sell at least, let's say, $12. That's 50%. Some professionals, and this is something that I can experience with an engineer that used to trade options, and he said that he was always looking to make at least 20 to 30%. Now, his trades were more structured, $10,000, $20,000. He has a different account. But the idea, this myth that you need to double your money or you need to have 10x on every single opportunity, it's not true. It is not true. So once again, remember, past performance does not constitute future performance. But if you take this trade, one contract, and you're looking to sell at 12. Now, some of you may like to actually have 2 contracts. So probably you're going to be around 1,500 or $1,600. Then if you take 30% profit, that's $600, $600 in your pocket. Think about that the next time you take a trade. Now, I'd like to expand more just to finish this video today. And let's take a look at Netflix. And what I'm looking here is on the daily chart, we have a base on June. We have the second base, kind of double bottom in this area. Let me just draw it to you with a brush. There you go, to bottom, expansion, pullback, base. Let's go for it. Now, the high there will be $252. Because we have such decent NFP, non-farm payroll, that's an opportunity. If by any chance we print in the US, I'm not from the US, my dad is New Yorker, but I talk like if I'm one, I feel like one. But if you do that, if the NFP today prints 400,000 jobs, I guarantee you today, before the close, we will be sitting at 3,800 in the S&P 500. That's not the case. So not so good news. It's actually great news for the markets right now, and you want to take advantage of that. This is the structure I see. If I go a little bit more deeper into the structure, let's hide the 20 exponential moving average and take a look at Fibonacci retracement. There you go, right there. 1, 2, 3, 4, 5. 5 days hovering around the 38.20%. It cannot be easier. Now, my first target would be 0.0% Fibonacci. That means that we have on the table a target of 250. That means if I'm taking 235, yeah, I'm paying more, and I'm doing what the big boys in Wall Street are doing. But listen, you can always look for the 250, and that's what I'm going to share with you. Because remember, I don't want you to subscribe just to listen to me to make my commentaries. I will do that, but the idea here, if I want you to keep coming, and if I want you to believe that what I'm saying is true, guess what? There's only one way here. You have to make money when you listen to me. That's it. There's nothing else. So I'm going to go to the option chain real quick. And that's right. So I'm following what I already know they're doing. And that's because they have on the line a lot of money, so they're not going to play like the out of the money. They are not looking for the stock to go there. They're looking for the stock to slowly build up. But let me give you another opportunity, which might actually be more cost. The price to play the game will be more accessible to everyone. So we're looking for expiration in the next 2 Fridays, almost 15 days to expiration. And if that's the case, you can probably go for the 245. Let's take a look at the 250, which I think it will be doable as far as, okay, there you go. I wouldn't go deeper. I would only the 250 strike that has 15,000 contracts, and I'm gonna take that one as an option. All right. If you don't have $800 or $700 to get the one that the big boys are buying, then absolutely right now selling at 805. So depending when you are watching this video, go for the 250 call based on paying no more than 320, and you're looking at least based on this everything I will say you can aim to get 50 to 100%. If you take one contract, first contract, get it out at 50%. If you take 2 contracts, get the first contract out of 50% profit, and then move your stop loss. Set a stop loss, protect what you have, all right? Go as far as you can go to break even, right? And then let it go and exit at, it was 285, 65, 5, that would be around 590. You exit for around 100% on the second contract, all right? So listen, write it down, have my idea, that's my game plan. And remember, in about 2 weeks, what do we expect? We expect a move, push higher, about 7%. Yes, Netflix can do that. If you take a look at this area, 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 10 days. And you have Sorish, a similar push. In this case, will be 12%. In this case, we're only looking for 7%. It's doable because NFP indicates job creation, it's taking a hit, and believe it or not, that's good for us because the Federal Reserve will shift from inflation to recession, a bad recession because it's an induced recession, and that's good for us because it will let the Federal Reserve rest, leave us in peace, and let the market go up. If that's all in line, then we have a great opportunity. Guys, thank you so much for watching. Make sure you're subscribed, because this is the type of idea, this is the type of content that you will get from me in this channel. And my team is happy. We're excited to bring this to the table and show you where you need to be pointing for better and bigger profits. Until the next video, never forget. That's right. Someone always knows.